A county reassessment has officially been completed for Delaware here at the end of 2023, and there's a lot of questions. Is this going to raise my property taxes? Is the tax rate going to change? Does my school district affect any of this? And all those questions are fantastic. So as of November 2023, the papers have officially gone out stating what new homeowners should expect their assessed value on their property to be. And a few things need to be noted on this. So if you own a home, you should have already received this. If you haven't, expect it in the mail soon, especially in Kent County. The paper will read, here's how many bedrooms you have, here's how many bathrooms you have, attic space, basement space, utilities, HVAC, backyard. All of that is going to be mentioned. It could even state as much as it's a basement or attic finished. You need to read over this carefully because you need to make sure it's accurate. If it's not accurate, you have until mid-February to file an appeal/give feedback that you feel it's incorrect to a third-party company that's conducting these assessments. That third-party company's name is Tyler Technologies. So don't call the levy court, don't call the property records department, and don't call your state representative. Call Tyler Technologies if your assessment is incorrect. And again, that's if the beds are mislisted, the bathrooms are mislisted, the square footage is wrong. You need to let them know. Now, I have gotten the opposite question on something being wrong on the assessment is instead of saying, hey, you said I had 4 beds, I only have 3. That's a great thing to fight and something you should get taken care of. But some people have said, hey, they're saying I only have 2 bedrooms when I actually have 4. That's something for you to decide on, but you have to file an appeal process only through Tyler Technologies if your assessment was incorrect for any reason. Now, if your assessment is correct, I already hear your next question. Zach, what are my taxes gonna be? Am I gonna see quadruple, sextuple, 600% of an increase on my taxes this coming year? And I'm gonna give you a quick glimpse. You're probably gonna pay more, but it's more than likely not going to be as much as you think. Now, for Kent County specifically, you can expect your first tax bill from this new assessed value to come on June 1st, while Newcastle County and Sussex County, your first one will come in on July 1st, and that will be in effect for the next year, which will, for most of you, affect how you actually escrow for your mortgage, or if you paid up front, the amount that you're paying. Now, this value, according to the state, will be assessed as of July 23. So whatever they deemed was your market value of your home on July of 2023, that is what they're going to build this assessed value off of. Just to be clear, there's 3 values that we need to break down. We have our market value, we have our assessed value, and then we have the actual tax value, which is going to be the amount of taxes you're physically paying on the property. As it sits currently, the formula goes like this. If you have a $100,000 home, your market value is going to be $100,000. Great. Now that $100,000 home is going to be assessed at 60% of that value, meaning your assessed value is going to be $60,000. So once you have your assessed value, how do you find out what your actual taxes are going to be? Well, for the county, it got changed. It used to be a 30-cent tax for every $100 of assessed value on your home, which again is 60% of the market value. So that means for a $100,000 market value property with a $60,000 assessed value is going to be paying an annual property tax of $2,160. Now, don't freak out because I know most of you are thinking the same thing. Zach, my home is worth more than $100,000. This says $200,000, $300,000, $700,000. What the heck does that mean? I hear you. So what the counties are doing, because again, like I said earlier, this is not a cash grab for more money. This is to equal out disbursement of how school districts are being taxed and how they're receiving money for their own schools. And there are 2 state codes that we have to think about here. The one state code says that after a reassessment, a county can only make 15% more than it had in the previous year. Now, the first code we have to look at actually talks about how much the state can make after doing a reassessment. And the number says they cannot make more than 15% more revenue off of property taxes than they had prior to that reassessment. In Kent County, for example, last year made $14.5 million off property taxes. But according to the state code, they cannot make more than 15% of that indefinitely after the reassessment. If they wanted to charge, a higher percent, they would have to do another reassessment. Seeing as the last one for Kent County was done in 1981, they're probably not going to do one again for a while. So what that means is the percentage on how they get to our taxes based off our assessed value. That formula I just showed you of 60% of the market value is the assessed value, and the tax rate of 0.36, meaning 36 cents for every $100 of assessed value is what you're taxed on. That's more than likely going to change, and it's going to change drastically, and here's why. First of all, that is a much bigger change than 15%, and they would be way out of state code. And if you're wondering if school district taxes and county taxes are any different, they are. School district taxes can only go up an extra 10% after a reassessment. So both of those cannot go too far from where they currently are in revenue. Again, that's how much the state's making in overall revenue. So some people may end up paying 15% or more than what they paid last year. But quick math, about $16-17 million next year. So they're not going to double and triple everyone's property taxes. Don't worry about that. What they are going to do is balance it out. And what they think is going to happen is about 14% of people will see their property taxes go up. Another 14% of people will see their property taxes go down. And everyone in the middle will probably stay relatively the same within $100 a year. And the reason they need to change the formula, and they're actively going to change the formula on how we're taxed, is because we were being taxed off the early 1980s value of a home. That's changed. I don't know if you know that. And the main reason they're going to change the formula, like I said, it's going to be way more than that 15% in revenue year over year if they did that. But also, could you imagine the amount of people who could no longer afford their mortgage? They could no longer afford to live where they were living. There'd be so many. So they're not going to do that. They will see the change happen. Again, enacting June 2024, that will be the new tax bill, but it's not going to be double and triple. It's going to be very, very comparable on the overarching average. You may be in a pocket where you see a slightly bigger increase than the person to your left or right, but overarching, like I said, they think 14% will go up significantly, and significantly being over $100 a year. 14% of people see it drop, and the rest, pretty much, the other 72% will see it stay in or around $100 of what they're already expecting. And understand that the taxed value of your home is based off the early 80s. We're one of the only states that has not updated this. It needs to get updated, but they're not going to do it in a way that is going to gouge people out of their own homes and destroy their financial situations. That's not what they're allowed to do, for one, and it's not what they're going to do. Now, Tyler Technologies is taking appeals and open feedback on how they did pretty much with their assessment, whether you think it's good or bad, until mid-December, December 15th. They're assuming about 12% of homeowners will appeal, so they're probably going to be busy. Get your word in. I'm going to put the emails up on the screen, phone numbers as well. They actively want to get contacted. It's in the bio as well. Get up with them if you think your tax assessment is incorrect. So yes, a lot of information, a lot of math, but listen, at the end of the day, here are my 3 takeaways. 1, we're super overdue for an assessment. 1981, 1987, those are not the best times for us to use the assessed value of our properties. As we know, just the last 3 years, they've gone up significantly. We have to pay the piper on that. Second, we have only risen our tax rate twice since that time frame, and that was in the early 90s and in 2008, and it was minuscule. So for Delaware to not alter that drastically is amazing. And the third takeaway I have is, if you have anything incorrect on your assessment, anything that's making you think, man, I'm gonna be paying way more than what I have to, hit us up if you'd like any advice or consult. Hit up our amazing partners over at Wolf & Associates. Erica Wolf help get all this information together with us. Or, most importantly, hit up Tyler Technologies before December 15th. File the appeal. We'll put the information back on the screen. Hit it up in the bio. And if you need anything, hit us up. We're here to bring more information.